Welcome to the world of business and finance here on Equa Television National, where we'll be looking at what is happening in our business sectors and finance sectors within Nigeria and around the world. I am Rachel Tanze, and first I would like us to look into our investments and the inflows we've been having as a country, basically from our foreign investors. So the total inflows of investors at export windows hit 1.49 billion naira in March. The Central Bank of Nigeria non-oil export repatriation rebate scheme appears to be yielding fruit as investigations reveal that inflows into the investors and exporters windows improved in the month of March. Now, according to the data obtained, total inflow into the I&E window rose by 59.2% month on month. It means that we have been seeing an inflow of investors. This is not having to do with our oil and gas sectors, as we know it to be our major source of income or revenue into the country. However, these are investors and the inflow coming from non-oil product that it has to do with probably our other things like our minerals and the goods and services in the country, other things we produce, wares, clothes, and we can go for to the exports in Lagos of the things that we manufacture here, and even to the things that we export to other African countries. Now, it is a good thing to know that aside oil and gas investment, we are having foreign investors coming into the country, putting in their money, having an inflow, and exporters that we are reaching 1.49 billion naira. It means we're doing something good and we should keep doing it. However, it shouldn't stop there, because we have many capacities, we have many sectors that are lying that we could have many more investors coming in aside the oil and gas, even with our cash crops and agriculture, even in our health sectors. We can have investors investing in our education sector. We can have investment coming. There's no sector of our economy that cannot draw foreign investors as long as we're doing the right thing. And we're looking forward to this growth increasing, because we have the capacity to grow beyond 1.49 billion, to have more and more investors coming, that in the second quarter of 2023, we will see a better analysis and then an increase in how much investors have brought into the economy. Now, inflation is no longer new or news to us, and it has had its way over the years of affecting every celebration and affecting even the increase. But as long as goods and services in the market keep increasing, you get less value. That is perhaps somewhere in the beginning of 2022, let's say January, you were earning 20,000 and a measure of sugar was 250 naira. If by January 2023 you're earning 50,000 and now we are buying sugar at 1,000 naira per measure, it means that our standard of living is still low, and you could be spending and earning as if your income hasn't increased, but that you are at the same level of January 2022. Now, there's a lot that could be done about the inflation in this country, as we have seen that one of the major factors concerning inflation is that our currency keeps losing its value. Now, there's so much to be done concerning the Nigerian factor, as we are still importing a lot of the things that we consume in the country. However, we still have Nigerian-made products here, but the raw materials are still imported. Either way, we are relying on a lot of imported goods, and directly and indirectly, we have the dollar influencing how much we produce and how much we sell finished products in our country. Now, inflation, however, also affects our businesses in so many ways, as still businesses in Nigeria depends on imported goods rather than us being on the side of exporting. We are the ones importing. Now, in the past weekends, we've seen the Easter celebration, we've seen the Ramadan fast going on, and inflation has been on the uprise, because people are going to the market, consumers are saying the prices of food are still high and are increasing on the daily basis. one of the major factors, aside from our currency losing its value, is the fact that we are having petrol scarcity and a lot of crises going on concerning petroleum in the country. As much as the NNPCL are doing their best, we are still having a high price of petroleum per liter, and these goods need to be transported and taken to where the consumers are, from the farm to the market and wherever it is destination. And we know that as long as we have scarcity in fuel price and in the availability of fuel, and then an increase in fuel prices, we will definitely have an effect on our prices of goods, and inflation is going to continue and increase. And you might wonder, why is there also an increase in not just consumed goods but even services? It is a vicious cycle where if I give you services that are not consumed directly, like food that we go to the market, I also need to go to the market. So I have to increase the price of my service for me to be able to keep up with the inflation in the market. And we can relate this to every other thing going on, and why inflation affects us directly and indirectly. And it doesn't stop at consumable products, but even products that we don't consume directly. Now, despite crude oil price expectation rise, Nigerians stand the risk of buying the premium motor spirit at 750 per liter. Now, one of the effects of the OPEC cuts in the crude oil price per barrel rises. These changes stand till the ending of 2023 by OPEC. However, we face a different challenge in the country. Now, one of the recent happenings concerning fuel is that OPEC has moved to shore up oil cuts output by 1.5 million barrels per day. We know that OPEC is the organization for petroleum exporting countries, and the key factors behind this shore up for OPEC is that over the years, crude oil prices has been going down. Crude price have fallen roughly below $80 a barrel from more than 120 in early June amid growing fears about the prospect of a global economic recession. Now, OPEC is seeing that over the years, crude oil price per barrel has been going down drastically, where we had the previous year, 2022, in July, the prices are as high as $120 per barrel. We are now seeing it somewhere at the beginning of the year, it went down to as low as $70 per barrel, and it has come up to about 80 to 84 dollar per barrel. However, OPEC is not comfortable with the decline in the price of crude oil, as they want it and is expected for it to keep going as a commodity that it is. Now, OPEC is saying that if they're able to cut down the allocation or the quota that is expected of its member countries, OPEC, and this is going to affect also how much, because OPEC has an umbrella price for its member countries, so that no country will benefit differently from oil price and everything that comes from oil production. And now, despite this rise in the crude oil per barrel, it's already starting to increase to $84 per barrel, we are facing a different risk in Nigeria. That is to say, there's going to be removal of fuel subsidy. And that means, as it is now, our fuel prices are still high, but we stand a different challenge that it might look like a win on another level, because if OPEC crude oil price per barrel is going high, it means more profit for us from the crude oil sales side. But then we are facing a different challenge in our economy, that is the issue of fuel subsidy. So in as much as it might look like Nigeria will also be making a good profit from the increase in the crude oil price per barrel, we are going to still be buying petroleum at a very high price, because subsidy is going to be taken off. And we have been asked by experts and analysts to brace ourselves for 750 naira per liter. It might be lower, it might be higher, but I feel this price is at the middle to tell us to brace ourselves up that if the subsidy eventually gets removed, this is the challenge we will be facing as a country concerning how much we buy petroleum per liter. Now, at about 1.6 million barrels per day, Nigeria's oil production was OPEC's biggest increase in March. Although this is still significantly low than the roughly 1.8 million barrels per day OPEC allocations to Nigeria, it shows that crude oil production increased from 1.18 million barrels in November. The output would be the highest production level since March 2022, when the country's production averaged 1.237 million barrels per day. Now, we know that we've been having issues with meeting our OPEC allocation of 1.8 million barrels of crude oil every day. Nigerians haven't been meeting up to their allocation or their quota by OPEC. However, we have an assurance coming from the NNPCL boss. The Group Chief Executive Officer of the Nigerian National Petroleum Company, Malam Mele Kyari, maintained that Nigeria could hit 2.2 million barrels per day in 2022 without the Organization of Petroleum Exporting Countries oil production quota rationing. So now Kyari is trying to tell us that without the new rationing of the quota by OPEC, that is bringing down how much they expect oil producing companies to provide, that we will be able to produce 2.2 million barrels per day. That is, we will be going above 4,000 barrels per day compared to the 1.8 million barrels that OPEC expects from us. However, Kyari was speaking at the virtual Global UAE Energy Forum, said despite odds, the country aims to produce 1.8 million barrels per day this year. So even with what OPEC has said, and even if we might not be able to reach the 2.2 million barrels per day, Kyari is telling us that Nigeria will be able to go back to the allocation that OPEC has given it, that is the 1.8 million barrels per day. We are keeping our fingers crossed, trusting that the NNPCL boss knows what he's doing. And we know some of the factors that has affected us in the past years was the fact that we have been dealing with oil theft. Now, I believe that if the issue of oil theft has been addressed and the measures that are supposed to be taken are taken, then yes, we will be able to meet our OPEC quota and even go above it, that the 2.2 million barrels this year, over 1 pound. Let's have a little understanding of what our foreign portfolio investment is. It consists of securities and other financial assets held by investors in another country. It does not provide the investor with direct ownership of a company asset, and it's relatively liquid depending on the volatility of the market. Along with the foreign direct investment, FPI is one of the common ways to invest in an overseas company. That is, foreign portfolio investment involves holding financial assets in another country, and we know that we have a lot of foreign investors holding assets in Nigeria, and the FPI holdings can include stocks, ADRs, GDRs, bonds, mutual funds, and exchange traded funds. So it could be bonds, it could be any among the above, and then we have foreign investors having this in Nigeria. However, we are seeing that there is a 49% drop, and this is the breakdown of the drop. So finding from the latest data released by the Nigerian Exchange Limited revealed that the value of the FPI for the 2 months of the year stood 44.52 billion naira as against 86.74 billion in the corresponding period of 2022. So thereabout from December of 2022, the ending of last year, we can see that it was standing at 86.74 billion naira. However, coming into 2023, in January 2023, the FPIs declined by 39.7% to 24.9 billion as against 41.31 billion in the corresponding period of 2022. In February 2023, it dropped by a whopping 56.8 to 19.63 billion naira as against 45 billion in the corresponding period. Now, the figures is not enough. We need to know why are we having such a decline and a drop in our foreign investors. And economics expert analyzed have attributed the decline on FPIs to foreign exchange volatility and inconsistent government policies and market regulations, among others. Now, I would like to focus on inconsistent government policies. And we know that we've been having that back and forth, especially with our monetary policy, where we saw first the policy on withdrawal limit, then the Naira redesign, and how it didn't go well. It kind of put the economy in a chaos because we now had a fast-growing inflation at the wrong places, and at the right places we had food costs going down, and there was no certainty in our market. And now we have a situation where our dollar and the price of Naira against the dollar keeps going low, and we are having our old Naira notes still being legal tender with the new Naira notes. And this inconsistency in our monetary policies can be a major attribute to why our foreign portfolio investment is dropping by 49%. Now, still concerning our economy, we have a debt profile of 46 trillion naira as a country. And under the present administration, our loan from China have risen up to the amount of 209%, up to the percentage of 209. And this increases between 2015 to 2022. This is as the total bilateral loans rose by 219% from 1.58 billion as of 2015. Our profile alone was just 1.58 billion as of 2015, and now in 2022 we're there about 5.07 billion, giving it a total of 4 billion increase. And that's, if you do your mathematics, we're there about 209%. Now, we've been living on debt as a country, and of course there is a significant growth in our debt. This is from China alone, notwithstanding the other countries that we have gone to and borrowed money from. This is from China alone, and we can see how high it has gone. And we also have a debt per citizen, despite the rising inflation. That is, I as a citizen, if I am to contribute to the payment of the debt profile of Nigeria, I am expected to pay 217,436. Now, this is the debt on every citizen that is from the 46 trillion naira debt profile amidst this long-lasting inflation. And we can see, despite the hardship, despite the inconsistency with our monetary policy, and then how everything has been going on in the country, we know that our minimum wage is still there, about 30,000, and it is not even implemented in every state, meaning we have other states that are still earning below 30,000 naira. And here we are, every citizen, I would say, inheriting a debt profile of 217,000. We will see how the years go, and then we hope that Nigeria does something about its debt profile, and which will lead me to the question that I want to ask: what next for the 4 trillion naira Ajaokuta Steel Complex? Now, the Ajaokuta Steel Complex was started in 1979, and it was designed to be the birthmark of industrialization in Nigeria. Now, looking at our debt profile and how much we've taken over the years, and as it seems, the steel mill needs about 4 trillion naira to be back to where it is. It was designed specifically to be the bedrock of Nigerian industrialization. As I have said, as an integrated steel plant, it was expected to lay the foundation for Nigerian industrial strife. Since 1979 to date, however, the project has not distilled anticipated liquid steel. Up till now, what Ajaokuta Steel Rolling Mills was created for hasn't been achieved. The Ajaokuta Steel Mill is still unfinished for decades after construction began. After several failed attempts at privatization, the Nigerian government took back control in 2016, the Ajaokuta steel mill still had not produced a single sheet of steel by December 2017. It means that there has been partial production and it never came to a finish. And we're talking about 1979, and this is exactly 4 decades since this mega structure was put in as a birthmark for our industrialization, but we are seeing that it has done little or nothing much to the economy, and we are looking at a debt profile that has been increasing over the years, and we have seen a massive increase from 2015 to 2022. What is the way forward? The way forward is simply putting in the effort into the economy sector that we need that can boost us. We know what industrialization means to an economy. It means growth. It means that there will be revenue. It means that we could expand